We are at the top of an ascending channel on the higher time frame, and the trend is bullish. Should I buy, sell, or do nothing? Hello, welcome to the continuation of the multi-timeframe discussion. I'm Tradeology, and today we're going to go a bit deeper into this topic. If you haven't subscribed to the channel yet, I'd really appreciate it if you do so right now and support me with your likes and comments. Alright, let's get to the main point. Let's say you're trading on the 1-minute time frame. Based on what we said in the previous session, you also need to analyze the middle and higher time frames. The middle time frame is 5 minutes, and the higher one is 15 minutes. Now let's go through a real example to see how this analysis is done. For instance, the price is clearly in an uptrend on the 15-minute time frame. Higher highs, higher lows, everything is obvious. Now you want to take a buy trade on the 1-minute chart. But you shouldn't enter just like that. First, check whether the price is near a 15-minute support level or not. For example, if the price has pulled back from the top and reached a key support level on the 15-minute chart, this could be a good spot to look for a buy trigger. Let's go to the 5-minute time frame. In this time frame, we can check whether the price has created a reversal structure or not. For example, a double bottom, or a breakout of a descending channel. If we see that, we can think about entering the trade with much more confidence. Now we move to the trading time frame, the 1-minute chart. Here's where we have to look very carefully for an entry. For example, a bullish engulfing candle or a breakout of a small trend line. The goal is to make an accurate entry with a small stop loss, and since we're trading in the direction of the higher time frames, our chances of success are higher. Let me give you another example to make it clearer. Let's say on the daily time frame, the price is approaching a very strong resistance. You are a trader on the 1-hour time frame. If that daily resistance breaks, it can be a great opportunity to buy. But if it fails to break and reverses, then you should look for sell setups. Now before entering on the 1-hour chart, let's take a look at the 4-hour time frame. For example, check if the price is showing a reversal pattern, like a double top or a bearish engulfing candle. If you see that, it means the chance of reversal is stronger. Now we reach the 1-hour chart, which is your trading time frame. Here, we look for a precise trigger. For example, the break of a short-term trend line, or a candle with a long upper wick showing strong selling pressure. The key point is to always take higher time frame levels seriously. A lot of times, a support level on the 5-minute chart gets broken, but it's just a fake break, because the real support on the 1-hour chart is still holding. That's why many people enter trades too early and take losses. Remember, multi-timeframe analysis means coordination between time frames. The stronger the higher time frame is, the more solid your analysis becomes. Imagine that on the 4-hour time frame we have an ascending channel and the price is approaching the top of that channel. That by itself could be a sign of potential bearish reversal. But on the other hand, the overall structure is still bullish and the market still has strength. What does this mean? It means there's both a chance of correction and a chance of trend continuation. That means the market is in a sensitive, two-sided situation that we don't have to trade here. But if we have enough experience, we might say, alright, right now the chance of a drop is almost equal to the chance of breaking the top. So I'll consider a 50% probability for both scenarios. Therefore, if I want to go short, it only makes sense if the reward is at least 2 times the risk. Only then is this trade logical. In this situation, you didn't predict anything, you made a decision. Based on probability and risk management. That's the difference between a surface-level trader and someone who is truly analyzing and trading. If the price drops, we make a profit with a known probability. And if it goes up, we exit with a logical and pre-calculated loss. And no major harm is done to the account. Thank you for staying with me up to this point. If you enjoyed this video, make sure to like it, don't forget to subscribe, and definitely let me know in the comments what time frame you prefer to work with so I can shape my future lessons accordingly. Good luck!